Well, YouTube, what's happening? If you're wondering why this channel is called Investing in the Rockies, take a look. Alright everyone, I hope you enjoyed that wee intro. I just thought I'd do something different this episode and kind of show you why this is called Investing in the Rockies. It's obviously because I'm living here in the middle of the Rockies. I do plenty of stuff out here. I go camping, I climb mountains, I ride a mountain bike. If you want to see any more of that, please comment below and let me know you liked it, and then I'll know to incorporate some of it into future videos. For now, we'll just get stuck into the finance side of things. So for today's episode, all I'm going to do is pick 2 stocks, and I'm going to tell you why I'm picking them. I'm going to talk about qualitative reasons and quantitative reasons as to why I'm picking these stocks. So firstly, we're just going to talk about why the company's good and certain things that's going on with each company. Then we're going to dive into the numbers, into the financial side of things, and we're going to look to see if their books are okay and to see if it's a company that are worth investing in. Stay around to the very end because I'm actually going to be buying the stocks on Wealthsimple Trade. So I'm going to show you me actually buying the stocks. Today I'm going to pick 1 Canadian stock and 1 US stock. Hopefully that keeps everyone happy. If you'd like to see more US stocks or you'd like to see more Canadian stocks, please just leave a comment below. So our first stock today is actually going to be Pepsi, which is US stock that trades on the NASDAQ. I'm sure many people here have heard of Pepsi or even drunk their products, and I'm going to give you 3 reasons as to why Pepsi should be a part of your portfolio. Reason number 1, the sheer size of Pepsi. Pepsi is huge. It's a multi-billion-dollar company. It trades in over 200 countries in the world. And believe it or not, it doesn't just sell Pepsi. It sells a variety of drinks and foods, which I'm actually going to pop up on the screen now. I'm sure many people here have had some of their foods and drunk some of their drinks. Pepsi is huge, and these guys aren't going away anytime soon. Reason number 2, Pepsi should be a part of your portfolio, and probably my most favourite reason, is the fact that it's recession proof. No matter what's going on in the world, no matter if there's a pandemic, no matter if there's a bad recession, people are still going to be buying Pepsi products. They're still going to be going to the supermarkets. They're still going to be buying their soft drinks. They're still going to be buying their Cheetos, etc. People are going to be buying these products no matter what. So although many companies right now are suffering due to this pandemic, Pepsi is actually not doing too bad, as people all over the world are constantly buying their products. Reason number 3 I like Pepsi is that they're always looking to grow. A lot of companies right now are just trying to get through these hard times. Pepsi are actually trying to grow their company. How I know that? I know that as they recently bought Rockstar energy drinks. I think it was back in March 21st. They purchased the Rockstar energy drinks. For those of you that haven't heard of Rockstar energy drinks, they actually are pretty big. You'll see them sponsoring the UFC. You'll see them sponsoring certain mountain biking competitions and things like that. So Pepsi are constantly looking to grow their company, and that's what we want. We want companies that are constantly looking to grow. That way their dividend's going to be safe, their dividend's going to grow, so we're going to earn more money every year. And thirdly, the value of the stock is going to grow. So you might get in a Pepsi at a certain price. Over years, and we'll look at the numbers now, but over time, Pepsi grows and grows and grows. So there's my 3 qualitative reasons why I like Pepsi. Now we're going to look at quantitative reasons. In other words, we're going to dive into the numbers. So I'll just flick into my laptop here. So the website I like to use the most when I'm researching companies is seekingalpha.com. I'll leave the link below for anyone that wants to go on themselves to have a wee look. But basically, here we are, folks. Here's Pepsi. This is the 1-year growth. If I flick it over here to the max, boom, there you go, folks. One of the reasons why I love Pepsi. Look at that growth all the way from 1990. Pepsi has been a powerhouse. It's just kept growing and growing and growing and growing all throughout the years. So it doesn't really matter when you get in with Pepsi. Just jump in now, because in 10 years time you can almost guarantee that the stock's going to be worth more. So that's the first thing I look for, the growth. The second thing I look for is the key data. So we flick in here. Waiting. Here we are. Now I know this kind of looks scary at first. The first time I looked at it, I was like, geez, there's so many numbers there. I don't really know what to look at, but there's only a couple of numbers you really have to look at. One that I look at is total revenue. So you see here, This is in millions, millions by the way, so this is 63,000 million. This is every year it's going up. So 63, 62, 63, 64, 67, 68. And then if you go to the gross profit again, 34, 34, 34, 35, 37, 37. What do you notice? It is slowly going up. So that's what we're looking. If the total revenue and the total gross profit were going down over the last 5 years, you'd be thinking to yourself, maybe this isn't the company that I want to get into. But we can see here really good steady growth. This company's growing year by year, and that's what we're looking for when we pick out certain dividend stocks. And the last thing I would look at, folks, but certainly not least, would be the dividends. So if I click onto the dividends here, first off, you look at the dividend yield, it's at 3.02%. As I've stated in previous videos, I like to aim for 4, but it's no problem if Pepsi's 3%, because I know I'll have companies in my portfolio that'll be 5%. I just try to I like to average it out at 4%. Second thing we're going to look at is the payout ratio. This is at 76.66%. So I mentioned what payout ratio means in my previous video. I'll link it below if you want to have a look at that, but I'll dive into it a wee bit more now. Payout ratio, this is basically what a company pays out to their dividend to their investors. So we can see here that they pay 76% of their profits go to their investors, and the other 25% goes into the company. Now if you notice that this number is actually over 100%, which many companies are at the minute, especially oil companies, that means that the company's paying out more money than what they're making. Therefore, that's completely unsustainable. So if you see something that's close to 100% or even over 100%, that's a major no-no. That means the dividend is not safe, and the company will potentially cut the dividend. Another thing I like just to look at is sort of the dividend history. We can see here it's had a dividend growth of 47 years, which is ridiculous. That's so long. And if we just click dividend history and we go to all, as you can see, folks, Pepsi's been paying out a dividend since 1990, and look at that growth throughout the years, just getting bigger and bigger and bigger. They're constantly trying to increase their dividend. So there you have it, folks. That's Pepsi wrapped up in a nutshell. What more would you like? Dividends constantly grow. The value of the stock company constantly grows. The company constantly grows. Pepsi's a great stock. I'm adding it to my portfolio. You should add to your portfolio. And make sure you stick around to the end. I'm actually going to buy some Pepsi stock on Wealthsimple Trade and show you how that's done. So today's second stock pick is going to be Toronto Dominion Bank, ticker symbol TD. This stock actually trades on two different stock exchanges. It trades on the Toronto Stock Exchange and it trades on the New York Stock Exchange. So if you've got access to either market, this stock's good for you. There's a couple of reasons why I like TD. First of all, any of the banks here in Canada are a pretty good bet. They're all solid companies. They're all dividend aristocrats. Being a dividend aristocrat basically means that these guys have been paying out dividends for years, growing their dividends for years. They look after dividends, they keep it safe, they want to keep paying their investors the dividends, and they've proven that time and time again over the years, which I really like. Another reason why I prefer TD over some of the other banks here in Canada is the fact that it has a pretty big presence in the US. TD has many stores in the US, and therefore it has potential for growth. They're actually currently really only based on the East Coast, not really so much so on the West Coast. So TD, out of all the big banks here in Canada, definitely has the potential to grow the most. So now we'll quickly dive into the numbers here with TD. I'll just flick into the laptop. So here's our second stock pick of the day, Toronto Dominion Bank, ticker symbol TD. First off, we'll have a look at the growth here. As you can see, yet again, this company's stock value has constantly been growing throughout the years. Had a bit of a dip here during the 2008 housing crash in the States. That's pretty famous. There's actually a really good film about that called The Big Short. So if you haven't watched that, I'd really recommend it. It goes into more detail all about the housing crash, and it's pretty entertaining. But apart from that, then it just kept going up and up and up until the recent crash now. But again, really consistent growth. Just jump in now if you're thinking about it. Don't wait. This company's going to be worth, this stock is going to be worth more in 5 or 10 years. I can almost guarantee that. So the second thing we're going to look at here is key data. It's just loading up. here we are. Again, if we just sort of focus on the numbers highlighted in black, total interest income 18, 19, 23, 27, 31, 31. Net interest income 14, 14, 16, 16, 18, 18. Total non-interest income 9.7, 10.7, 11.9, 12, 13, 13. Again, what do you notice? Constant steady growth. That's what we're looking, folks. We're looking companies that grow. And from what I'm reading here, this company has been growing nicely over the last 5 years and even longer. So next thing we're going to take a look at here is the dividends, of course. So we see here it's got a really nice dividend of 5.41%. Just like I said earlier about Pepsi. Pepsi was only 3, but that doesn't worry me because I've got TD in my portfolio as well at a lovely dividend yield of 5.4%. Payout ratio is actually lower than Pepsi, which is really nice. That means roughly about 60% of their profits are going to the investors like you and I, and the other 40% is going into the company. Yeah, just if we also look at the amounts, you're getting 56 cents per quarter, so 56 cents times 4 per year for every stock that you own in this company. Next thing we'll look at is the dividend history. And if I just flick the all, so there you have it, folks. Look at that growth all the way from, when's this go, like 1989, so even longer than Pepsi. Obviously it's went down some years, it hasn't been growing the way Pepsi's grew, but overall this dividend has been growing and growing and growing, so you're going to be expecting to be earning more and more off your dividend for this company as the years go on. Looks really nice, looks really healthy. So yeah, there you have it. There's TD wrapped up as well, folks. What more would you like? Companies constantly growing, they're constantly paying dividends, and they're constantly trying to grow their dividends. Now we'll jump into Wealthsimple Trade, and I'm actually going to purchase both Pepsi stock and TD stock, and I'm going to show you how to do that. So here you are, folks. Here's a quick look at my portfolio. I'm not going to spend too much time in this, but this is my TFSA, tax-free savings account. I'm up $70 in the last month. Let's just go to the day. I'm up $109 today, which is a really good day. If I go to all time, down $129, which is much better than what I was the last time I showed you my portfolio. Down 2% overall all time. Not worried about that whatsoever. I know I can almost guarantee that's going to go up in years to come. So we'll just scroll down here and I'll just show you exactly how to purchase the Pepsi stock and the TD stock that we're talking about. So we'll do Pepsi first. I'll just click into it here. Here it's trading at 133 US dollars at the moment. I've got one share already of Pepsi at an average price of $128. Makes up just under 3% of my portfolio. So we'll click buy. We want to go TFSA. Next. I'm going to buy one share. Continue. These are the fees. Every time you buy a US share on Wealthsimple Trade, you actually have to include a 1.5% fee, which isn't the best, but it still enables me to buy US stocks, so I'm happy enough. So the estimated cost in Canadian dollars is going to be about 187 Canadian dollars. Confirm order. Boom, there we go. There you have it, folks. There's one share of Pepsi bought. I'll hit maybe later to that. And the next one we're going to buy is TD. So if I click all 24 holdings and scroll down, this is TD trading on Toronto Stock Exchange. That's why this price is a bit higher than the one that was in Seeking Alpha, because the Seeking Alpha one was showing the Seeking Alpha one was showing the US stock price. So if I scroll down here, I've already got 10 shares of TD. As I said before, I really like TD. It makes up just over 8% of my portfolio at an average price of $58.95. It's currently trading at $56.14, so I'm actually going to be averaging down on that average price value. So I'm actually going to buy 2 shares of TD. So we'll go 2, continue. So estimated cost is going to be $112, confirm order. Boom, and there you have it, folks. 2 shares of TD bought. So that's everything for today's episode, folks. I just want to end by thanking everyone who's subscribed so far. I'm still blown away by support. We've actually hit 100 subscribers, which is crazy. So big thanks to everyone who has subscribed. If you've made it to the end of this video and you still haven't subscribed, please do me a big favour. Smash the like button, hit the subscribe button. I'm basically an Irish guy living here in Banff, Canada, and I'm documenting my journey to financial freedom, and I want to help you too document your journey to financial freedom. Peace out, folks. Have a good one.